So this is the Ultimate Beginner's Guide series to successful trading. Without understanding the step prior, you're gonna be lost. This is why it's extremely important. Now, of course, all of these videos I do have in my group. If you want to join the group, definitely check it out. Send me a message, trade_intuition. But this is the yearly fee. You get a month for free. If you want to do the monthly, then let me know, trade_intuition, and I'll steer you straight. So let's go ahead and get started. For the very first thing we want to do is how to identify key levels using top-down analysis. What we have to do is we have to go to a higher time frame. Now, depending on how long you're planning to hold this trade, depends on the time frame you want. You can start on a daily, then go down to 4 hour. You can start on a weekly, go down to a daily. You can start on a monthly, go down to a weekly. It all depends on how far in advance you're looking. How long are you planning to hold the trade? Is this something for maybe a few months? If so, daily, weekly is fine. If something for several months to possibly a year or longer, then you may want to do a weekly to a daily, going down from there. Why is that? Well, we have stronger levels on the way up. Stronger levels on the way up versus something on a daily. So here we would have our levels on the weekly. On the daily, they would be slightly different. Now, one thing that we do have to understand is on a higher time frame, these wicks are wicks. However, on a lower time frame, these wicks are actually candle bodies. So for example, if I were to use this level right here, 104.355, this would not be a level that would work on a daily. So if we go to the daily time frame, we can see the level slightly higher, and that is because the wick is on the higher time frame. So this depends on your outlook that you want to do. If this is something for, like I said, a few weeks to maybe a month or so, I like doing the daily. So for this example, since I'm only looking for trades, not for 8 months, 24 months, I'm looking for trades that I want to find key levels. I'm going to use the daily time frame and then go down to the 4 hour so that I could potentially enter a trade. For the top-down analysis, what we're doing is we're looking for pivots. What is a pivot? A pivot is where the price action goes in one direction and it stops, and then it goes another direction. This level right here, this pivot is very strong. The higher the time frame, the stronger it is. And we went over the difference in the different time frames as far as what is what. The candle body closes would be here. However, on a higher time frame, the candle body close may be here. So this shows a difference as far as levels go. Now, when the price comes down and it stops once again and it comes up, this is a very strong level because the price stopped going down. So these levels are key levels. So what we're going to do now is we're going to have our magnet tool on. We're going to look for levels that where the price went up, it stopped, and it came down. We're looking at candle body closes only. I strongly recommend you having a pen and paper so that you can write this stuff down. This right here is at least $1,000 course, and I'm giving it to you for free. I want you to make money, guys. I want to make money with you, not because of you. The people that are in the group, they want to learn faster. They want to have access to me almost 24/7. They want to get, they want to get more. But here, I'm showing you all this stuff. So what I want to do is I want to use my horizontal array. It is labeled over here. It highlights light gray whenever I'm doing my levels or my tools. So the first thing I want to do is I want to find the highest point. The highest point is right here, and the magnet tool is crucial when doing this. That way it snaps in place. Magnet tool snapped to the candle body close. If it doesn't, you can always have your double arrows come out, click and drag to go up, use your mouse wheel to move it, and then now you can make sure that it snaps in place where you want it to snap. And it did, but I'm just showing you how to do it in case you have any issues. Now, what we also want to do is we want to identify highs and lows and where the price action stopped. We can see just starting here, price went up and it stopped. So we put our level there, price came down and it stopped. So now what I want to do is I want to do my next level right here. My next level is right here. We can see that it slightly came down a little bit more. If you want to get nitpicky with it, you can go to this one since it's slightly lower. And so the price came down, up, down, and it stopped here. And now it's starting to go up again. Then it comes down and it creates another level and another level. So throughout the entire chart, there's nothing but support resistance levels. Now, our main key is to identify the tops, the bottoms, and then preferably a mid-level or somewhere kind of in the middle where the price action stopped. Now, the more candle bodies, the more candle wicks that stop at this location, the stronger it is. Now we can see price went up, came down, it stopped right here, came up again, and then now we have this level. Before it was this level, but now it is this level. So now we can do is have a candle body close and level right there. Now what we want to do is we want to do top-down analysis. We want to go to a lower time frame. And the reason for the lower time frame is because now inside this leg, extension leg, or just move up, there's a lot of ups and downs. You'll have up, down, up, down, up, down. You have all that throughout here, and you can see more of the price action as you go to a lower time frame. Now let's go to a lower time frame, and we can see that there's a lot of ups and downs throughout this whole chart. There's a lot of ups and downs. Here we can see price went up, kind of sideways, up, down. And if you want to make this a little bit easier, see it doesn't look clean. What you could do is you can click on this and go to your settings, go to your text, and then type in daily or just a D, go to the right. And this one I'm gonna put middle, and then go to template, save as. Can't see it here, but save as. You can save it whatever you want. I have a lot of different templates, but you can save it to whatever. And then now it'll be right here, daily. Now what I could do is I can come over here. I can do my magnet tool once more, come over here to the top of this, but this is actually the highest point. So I could do this level right here. Same thing, come over here. And now this is my 4 hour. So it's my 4 hour. And what I could do is I can do a different color for this, for the 4 hour. And again, saving these templates are going to help you out tremendously. So you can just, instead of doing this every single time, it'll automatically be done. I'm not going to do it because I already have templates saved. Now what it does, it kind of creates this zone right here. So if the price does come up here because of our different timeframes that we've done, our different levels, we know that this daily is very strong. The higher the time frame, the stronger the support resistance, the stronger the trend lines, the stronger the divergence, the stronger just everything. So just everything, your moving averages, everything, it's stronger. Now, it doesn't mean that it's going to get rejected here. It just means that there's a pretty good chance it might get rejected due to the strength of this. It'll be rejected until it breaks up. Then we have our next level, which is right here, of our 4 hour. This is saying that it's very strong, not as strong as the daily, but it's still very strong. Now, all of these levels have their own strength. A 15-minute has its own strength as far as the level goes. A 5-minute has its own strength. Just know it's much easier to break through a 5-minute support resistance than it is a daily. It can still be broken, the daily, but it's a little bit different. It's stronger. All right, so in reference to identifying key levels using top-down analysis, again, we have to go to a higher time frame. And when you're doing this, the different variables that come into play is how long do you expect to hold this? Are you expecting to hold this for an extended period of time, over a year? If so, you want to do weekly, then daily, then maybe a 4 hour to actually enter on. If you're doing this more of a type swing trade, maybe a week or two, then in my opinion, the best time frames to do daily, then the 4 hour, then potentially for your entry is the 1 hour. We're going to talk about entries later in the segment for the Ultimate Beginner's Guide training series. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.